What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on global investment bank and financial services company Citigroup, symbol C. And when we take a look at the chart, we're simply going to be looking for two things. One, what is the direction of the trend? And two, are there clues as to where the big money might be stacked up, patiently waiting to buy at lower prices or patiently waiting to sell at higher prices? So let's get right into it. First thing we're going to do is assess the trend. We'll do that by assessing the most recent highs and the most recent lows. And so we go from low to high, high to low, low to high. We'll notice that as they're moving from left to right, the highs are moving higher. And as they're moving from left to right, the lows are also moving higher. So that's the definition of an uptrend. So Citigroup is now in an uptrend. And when we're in an uptrend, we'll move to step two, and we'll simply look for a pullback into a support level. And this is going to get real interesting really quick, because when we look at the uptrend, the breakout from the prior swing high, somewhere in this vicinity here, this black dash line, oftentimes when an uptrend breaks above the prior swing high, you'll get a retest or a retracement back to that breakout point. So if we look at the chart using daily candles, we already kind of did that. We broke above that swing high, had a retest of that level there, and then continued higher in the last couple days. Now, what we could do is simply look for a support level to see if we're going to get another retracement, another test of that breakout point, or maybe slightly higher this time. And so I'm going to draw a support level, the first one I can see on the daily time frame. There is a support level right here, right about at the breakout point, which is really interesting. So from 87.30, actually give it a little higher on that entry there. 87.46 to 83.60 is a support level that's hugging that breakout line. Okay, so if we get a pullback to there, that's kind of the way the market structure. The market participants will often behave that way. They'll go back and try to pick up some more stock at lower prices before heading higher. But and there is support level down here that is so much below current price, I'm just not going to spend any time on right now because time is money. So let's go take a look then at to see if we can find a resistance level. And we're going to have to go back quite a ways to find a resistance level. And that resistance level, it's got to be above current price. So that I'm just drawing that red line there to know that I need to find a resistance level to the left and above that line. And we're going to go back a long, long way. We have to go back all the way to the global financial crisis to go find a resistance level above current price. So we're going to climb up here and see if we've got some a meaningful resistance level. And there's a little cluster there that we might run into some some hesitation, or we may run into a little bit of turbulence in the 96 range. But I'm going to go higher to a more meaningful resistance level for a target. And this gets really interesting because notice that on the breakout to the upside, remember that black dash line I had on the breakout to the upside? And we're going to look for a pullback to that. Well, if you flip that formation upside down, there's a breakout here to the downside. So could we rally up to the last point where we broke out to the downside below that swing low there? And yeah, there is a resistance level. So if we actually draw that level, it'll look something like this. That level would look like 117.76 to 122.68. Okay, so that can be a reasonable target. And if you wanted to get even more aggressive on your target, the next level would be right up here. And that's where that was the origin of that entire cascade effect that happened during the global financial crisis. Okay, so you could have a target at just in front of 117, or if you want to get even more aggressive, or maybe a secondary target at 144. But we'll be a little more conservative with our target and call it 117. So let's go see if we can structure a trade now based on the support level we found and the resistance levels that we had to go back a long, long way to go find. Okay, so if we pull back to current price and see if we can set up a trade here. Now there's two ways to consider setting up a trade, and one would be to wait for a pullback. So you could have a buy limit order at 87.54, right at the top of that support level, have a protective stop just below that support level. I'll make that a red dash line. So our red dash line there, I'll move the breakout line out of the way. Move that out of the way here. So protective stop at the red dash line. Your entry point could be anywhere in the green area, or since the target is so far above even where current price is, you might even consider just placing a market order if the stock is trading anywhere near the close of trading here on Wednesday after the close, and that would be somewhere in the 90 price range. Okay, so I'm going to be a little more aggressive on the entry because the target is giving so much reward potential. So you could place either a market order or you could place a buy limit order somewhere in the 90, call it just 90, 90, 50, 91 price range. Protective stop right at that red dash line. Target all the way just in front of that meaningful breakout resistance level that we had to go back so far to find. And that trade setup right there would have a 3.7 to 1 reward to risk ratio. And that's with a very aggressive entry. If you wanted to be more conservative on your entry, your trade setup would have a 6 to 1 reward, actually a little over 6 to 1 reward to risk ratio if you waited for a pullback to 87. A little more aggressive on your entry, closer to the 90 price point, and you'd be looking at, we'll call that like a 4 to 1 reward to risk ratio right there. So if you don't want to wait for a pullback, generally I avoid market orders. It's just not generally just not disciplined enough for me. But because we have so much reward potential to that target, it can be a little more aggressive on the entry. And maybe we don't get a pullback. You'd be kind of kicking yourself if Citigroup just kept rising and didn't get that pullback. So you're waiting for a couple point pullback. You're almost being a little penny wise and pound foolish. But this is all personal preference. If you want to be a little more aggressive, maybe a little more conservative. And if you want to get even more conservative, once again, that was a much lower entry price. You'd probably have to wait some time for it to get there, but that would be like in the 80 price point. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.